Welcome back. You're watching Business Week here on Arise News. I'm joined now by Muktar Mohammed, we CEO of Finance with Muktar, to review some of our top stories in more detail. Good morning to you, Muktar. It's always a pleasure to have you. Happy New Year.
Happy New Year.
Great. Abby.
It's been a while.
It really has been a while for a bit that. All right, let's begin with petrol consumption hitting 63.7 million litres daily in December 2025. Firstly, what does this mean? And what does this tell us about fuel demand?
Well, it tells us that we are now driving, maybe now we are now bringing our cars out more than we used to be bringing out before. But I think the good thing about it is that we've seen fuel demand goes up and we've seen price have relatively come down. So for me, that's the point. Because again, before now, when you see this consumption, then you see the high subsidy bills that comes with it. Then you see those queues start coming because government is saying we are consuming so much, we don't have money to pay for more subsidies. So I think for me, the good thing is that you are seeing those consumption, and yet you are seeing that price, there's a price war. Well, I call it price war, where you see the price are going down, you can get it less than what it would have been if it was not deregulated. For me, that for me is the key takeaway, that we are consuming more. And again, now we are bringing out our cars more. Before now, you just have a point that they said we're consuming less. And at that time, you saw that the price of fuel was virtually over 1,000 in places like Lagos. Now you've seen that the average cost of price of fuel in Lagos is about 800 naira, which means that a lot of Nigerians that used to keep their cars at home are now beginning to bring their cars out. That is one. Then secondly, it means that, again, it means for those that have car, they are now enjoying the benefit of a reduced price of petroleum product, price, and the consumption has gone high. But to those that are still using the public transport, price hasn't gone down. So you see why we keep saying that it seems to be like the deregulation is more to the advantage of those that have car than to the advantage that those that don't have cars. Give an example in the month of December, we saw that despite the demand, despite the reduction going as low as 700, we didn't see that price come down. We saw that there was a lot of price hike. Now we are back now. Those price hasn't come down because, okay, it's over the festivity period. So for me, I think we need to do a lot in terms of public transport to make sure the cost of public transportation comes down, and that will have an effect on the life of the ordinary Nigerian. For now, yes, those that have cars seems to benefit. So it means maybe those that used to go by public transport before now, seeing it as a cheaper means, keeping their cars at home, are beginning to take their cars out because it's now cheaper to drive your car than to enter public transport. And that also comes with its own challenges in a state like Lagos, where that means that you begin to see more of traffic.
Absolutely. And of course, from a consumer behavior perspective, as you've just explained, availability and price, pump price also is driving this effect on consumption rate. It will be interesting to check the metrics on really the public transportation numbers right there and how that could possibly change. Let's look next at Nigeria's inflation hitting 15.15% in December 2025. How sustainable is this trend, and what risk could reverse the recent moderation?
Well, how sustainable it is, then I just have to look at the budget. The government budget is saying that it sees that inflation will come to 16%. So that tells you that whatever we may have now might be artificial. Now, what is the drive towards we're seeing those inflation numbers come down? If you look to month, we still have those challenges to month. But if you look to year, you see that those spikes are coming down. And the month are coming down. I mean, the year are coming down because of the rebasing that we have done. But the month, there's still those challenges. Even if you say prices are easing a little, they are not easing drastically. But again, they are not going up drastically like it used to be before. So definitely, what will be the challenge? The challenge is that when you look at those high risk level, then going into 2026, which by the way is going to be an election year. And you know what elections in Nigeria, that it means that the movement of liquidity, which is normally good for the informal sector, which means that the informal sector will do more business because they strive on liquidity. But that challenge will be in how you manage this liquidity, so that you don't begin to have those issues that have to do with high liquidity that will now fuel inflation. And that is why you can see that the CBN is still looking at ways to get this liquidity issue, because they know that they cannot staff the system of liquidity, because the most vibrant sector of the Nigerian economy is the informal sector. So they need to find a way around it. now, and that is why we are not seeing that inflation has come down. Normally, you should have seen a rate cut consistently, but there's still those risks. Those risks has to come again, FX. We might have seen it easing, moderated at 1,500, but any external factors could also see FX go up. So they are looking at all this, and that's why we are not beginning to see the cut like we are seeing globally.
So all these considerations are very key because it will determine.
Yes, it's key. Yeah. And again, in inflation figure, we still, don't forget, we are still dealing with insecurity.
Absolutely.
So it's, and again, we are also dealing with a new tax law, which may see some of these companies passing those bulk that would normally back to the consumer. You see, just yesterday we talked about the 7.5 electronic fee, even if it is not new, but you see it being passed back to the consumer. So there's a lot of check and balances. Transportation, like I just mentioned, hasn't come down. Security, yes, have improved, but has it really improved in the farm settlement in Nigeria? That, again, is a challenge. We need to get that right before we begin to see those drastic reduction in inflation. But like I said, the government have also been conservative of their expectation of inflation this year, because the president did make mention of that in the National Assembly, that he felt that inflation will fall down to 16% at the end of the year.
All right, some very pertinent points you've raised there. Let's look at Toyota Industrial shares hitting record high after a buyout offer of $35 billion.
You know, buyout is good. When you hear buyout, is good for investors. So investors are looking at the buyout and say, well, that's good for us. That means the company have confidence in their own shares. Now, you have to look at what we're saying there is that Toyota is beginning to see other markets to expand, because now they may have the challenge in the American market because of the tariff. So they are beginning to see other markets, and they're beginning to see opportunity. And don't forget, again, Toyota is now building up also to make sure that they take advantage of clean energy type, and I mean, their cars not running on petrol again. So those are what they are looking at, and they are then buying back their share. Now, when you say buyback, is that a company is beginning to have confidence, knowing that we are going to beat our expectation. And so the majority shareholders are telling you, I want to buy more of that. And again, they are buying it at a higher price. That gives you more confidence. So I think it's good for the automobile industry, especially in Japan. Remember that Toyota also have competitors in Japan. So this expectation of a new, of a good financial year and buying back is good for that sector, knowing that that sector is a key driver of the Japanese economy.
So how strategic is this for Toyota's long-term restructuring?
I think Toyota already have a long-term plan. Remember, again, they are also not thinking of, rather than just take their cars to the US again, they are thinking to have one of their big factories in the United States of America, because of the tariff issue, whereby it's cheaper now for them to produce in America rather than. So they are factoring in others, and they are also looking at the new market. Toyota doesn't so much play around in the European market, but they are thinking of having a share of that market. So all these are priced into their near term. And don't forget that Africa still remain one of the hub of Toyota products. So they still have those advantage.
Absolutely. So good times for Toyota in that case. And I'm sure even better times ahead from what you've just analyzed. Let's move to the U.S. House of Reps approving an extension for the Africa Trade Program. Of course, Africa Growth and Opportunity Act.
Abi, it's a good news because, again, with issues that have to do with tariff and others, we've thought that agreement will not see the light of the day. But fortunately, we've seen that that agreement see the light of the day. And that also tells us that it's not just all about tariff war. That means America also see the African markets as where to grow their economy, because we've always seen it like they are not interested in our market. We didn't even think that this deal will be renewed. I think it's good, and but again, there's still challenges with those deals with countries like South Africa that were left out of that AGOA deal and say no, we still want to be part of it. And again, that deal again has it really given Africa more advantage in terms of going into the American market? Yes, before now, I don't think that deal has really made Africa gain so much. But now I think we'll see those gain, because now we are battling with tariff issue. A country like Nigeria has tariff placed on their products. So with this AGOA initiative, so we'll see those tariffs wiped out, and then we'll begin to see that it become more profitable for an African business perspective to import their product to the United States.
So you reckon that in light of the prevalent economic conditions and trade bilateral relations, this is a good time to have that in place as opposed to previously?
It's a good time, but again, don't forget we still have the challenge that has to come with visa. Those issues are still there. That's a key challenge now. Because if you look at the list of countries that are really being affected by the visa issues, they are all in Africa. Majority of them are African countries. So definitely in signing this agreement with AGOA, we also need to look at that visa issue. Will they come up with a proposal that makes it easier for businesses to have business visa? Because the B1, B2 visa in most countries in Africa that are the key driver of this AGOA product have been suspended for now. So definitely there has to be a strategy way around it. We've not seen the entirety of that document, whether it will address those visa challenges.
Would you say that's the biggest impediment to?
For me, that's the biggest impediment now. Right. Because again, when you look at the AGOA initiatives that help small business, especially startup, and now when you have those visa issues, then how can they be able to assess the American market? You can say, oh, you can assess it. You don't have to do with one area of technology. It's a different thing when you have to communicate. You have to see your product. You have to take your product. You have to sell your product. Even if you're going to sell it online, sometimes it's good to have a presence. And in having those presents, you need to be present. So that's, for me, the biggest issue is this deal sign. How do we navigate those visa issues? Even if they are temporary measures, how long will these temporary modules be lifted, and so that we can have those smooth sailing, especially for countries that have the B1, B2 visa issue. Don't forget again, the South Africa that are not even included in this do not have the issue of the B1, B2. Absolutely. So that again is a big challenge.
Right. Well, I mean, as we know, it's still going to the Senate. So hopefully when this does, or hopefully if it does get passed, these considerations will
I think the good news is that they are even considering it. Absolutely. The House have agreed to an extension. Compared before now, there was the fear that that extension may not happen.
It's a good place to start, or continue rather in this case. Let's look at Venezuela. Stocks surging 130% to record highs amid optimism, of course, in light of all the rally we've seen.
So that tells you the perception of investors. When they see crisis, see opportunities. Now we've looked at those soil, and if you look at those soil, it's because Venezuela is a petroleum-driven economy. And for as long as investors are concerned, that sector has been mismanaged by previous administration. Now they are seeing the American intervention in that sector as a means to manage that sector for the general prosperity of the Venezuela people. Remember now, America said that we will have control over those oil sector. We will have control over who you sell those oil to. And this oil will be largely so. And again, they come out with a strategy that they will make sure that revenue from those oil sales are used to improve the life of the ordinary Venezuela. So they are beginning to see that, okay, that means there will be an economic revival from where we are, where we used to be, to where we want to be now. And then there will be proper management of our oil resources. I think for me, that's why you are seeing those soils. And those soils are largely driven by those sectors that have to play in the petroleum sector. That tells you that they are now beginning to see there are opportunities there. There will be corporate governance, and also there will be trade agreement that will be beneficiary both to the country, both to the citizen, and also to companies.
Essentially, but looking at it more granularly, would you say that this rally is driven more by fundamentals or political sentiment?
I think there are both. Political sentiment in that we might move to a set time where we see political stability in Venezuela. Because before now, the president there, Maduro, was not generally accepted. It's a general convention that he didn't really win that election. And so there was those issues that have to do with political turmoil in Venezuela. And then you talk about the fundamentals. The fundamentals now, Venezuela economy is largely driven by oil. And now the fundamental there is that this oil will be properly managed and will have large players comes into this market. So that gives the fundamental a good foundation. So it's driven by both political and fundamental.
So it's a nice mix. Well, in wrapping up, and the biggest question, would you say these gains can be sustained ultimately?
Well, in sustaining of gain, there are a lot of factors. You have to look at the micro, you have to look at the physical, you have to look at the political. Now, what we are seeing is that we are looking at the political side. and we are looking at the micro side. But we are not looking at the physical side on what role the government of Venezuela is going to play. Are they going to abide by this agreement, or there might be a challenge with those agreements going forward in the near future? So yes, you could also say in the short term, there seems to be a little bit, but in the long term, there might be challenge, and that challenge might just be physical.
All right, it's always great to have a foresight as to what could possibly happen. I want to thank you so much, Muktar. Always a pleasure to have you here, and we'll see you again very soon. It's been a very eventful week, of course.
Thank you.
Most welcome.